Foundation of investor relations is relationships and communications, and that never changes regardless of the size of the company.
How do you develop those relationships? Through the communication and even the cadence, the kind of materials you send them. How have you been able to develop relationships that stick and actually get attention that turns into conviction of buying?
I think the number one success in my career has been accessibility. Like always making sure that you get back to people. If they send an email, if they call you, if they reach out in whatever shape that is, making sure you get back to them quickly, and transparency. The entire success of your career is based on people believing you, you being credible and honest and having them know that you're going to tell them the truth. It's not always happy stories, right? There's always struggles. Mining's an up and down industry and we have good years and bad years. Just being honest with people and letting them see what's actually going on in the company. And it's with a fine line. I always get people calling me saying, the share price is down today. What does the market know that I don't know? Now that we're talking about insider information, obviously I can't tell you anything that the market doesn't know, but they still need to come off the phone feeling like you've been honest with them and have told them as much as you possibly can. And even when people are mean, in some of those downtimes, I get horrible emails from people.
I would imagine.
But I always reply. And people are shocked. They're like, oh, wow, I did not expect to get a response. And it completely changes the tenor of that conversation because you took the time to get back to them. You took the time to listen to their concerns. And then it always changes that relationship. It's more positive going forward. And my favorite story was someone sent a horrible email to me and signed it. F you. I remember my New Year's resolution that I'm not swearing anymore, so I won't swear.
Okay. Yeah.
And I replied and I said, "Dear Mr. You, it's a pleasure to hear from you." And so I pretended that I thought the first word was his first name. And I thought it was hilarious. And he did too. And it's been this long lasting relationship now where he's invested in multiple companies because he knows that I'm going to get back and we'll address whatever the issues are. So I think that's been the key to success with relationships. I've worked for some companies that were really successful and some that weren't, but it's never been my integrity at question. They always know that I'm working hard and then I'm looking out for the investors. Every investor matters. And sometimes people on my team will say like, why are you spending so much time with that retail investor? They probably own 10 shares. Well, those are the people that need me the most. The institutional investors have an entire team of people doing due diligence. The high net worth investors have brokers who do all of their research for them. It's the mom and pop, the small retail investors who maybe don't know mining very well or invested in our company because they heard about it in a newsletter or heard it from their cab driver and they're excited, but they don't know anything about the company. They're the people that need my support the most. And I think that's really important to make sure that you're giving every investor, regardless of their size, an equal amount of time.
That's really interesting to hear. I think there's also a long tail value in that. There's a lot of value in retail investors being long-term shareholders, and they build into the story and they become real champions for companies that communicate well with them. Speaking to operators of junior companies, public companies, that there's this desire to always have institutional investors. One question is, are you ready for institutions? And the second is, if you don't have a good sticky retail base, one institutional investor can crush you overnight when they're just like, we're out of the sector, right? They'll relentlessly hit the sell button when they're moving on. And I'm thinking of this as in the form of building companies in public markets and how investor relations plays a role to that.
Well, I think the institutional investors bring credibility, right? If you've got big institutional investors and the usual suspects who invest in your space, you know that they've done an incredible amount of due diligence before they've taken that position. And so people who are looking at your ownership structure can kind of say, oh, well, if, BlackRock invested, it must be a good company to invest in, therefore I will as well. A big chunky institutional investors that's long only, you don't have any liquidity. They're going to hold your stock for 4, 5, 6 years, right? So you do need the hedge funds for liquidity, and you do need those retail investors. They bring the liquidity because they're going to jump around based on what they're excited about that month. So you certainly need a good mix of both in the share price as well, I think. And retail investors will follow you from company to company. Again, if you've built that relationship, they'll go, oh, wow, you're working where now? And then they're going to look at that stock and follow you there. Whereas the institutional investors, I don't think, would follow the people as much as the retail investors would.
Interesting.
But retail investors A lot of them invest because of newsletter writers, right? And so they may be following your podcast and it's like, oh, Corey, is recommending this company, so I'm going to invest in that company. If there's enough of them, if the newsletter writer has enough influence, the retail investors themselves can basically function like an institution. If that newsletter writer says buy, they're going to buy en masse, and if they sell, they're going to sell en masse. So I always caution people, never underestimate the ability of retail investors to move your share price, because if it's enough of them working together, they basically function like an institution.
Yeah, it's actually very true. And I mean, we all got a real taste of that during the whole kind of meme stock run there. But I mean, when it comes to just building real companies, I think it's something that has to be valued. I just want to step back real quick. And for the lawyers and everybody out there, this is by no means financial advice. I am recommending no companies. That's not the purpose of this podcast.
You know what I mean? Some people do, right? Some people
Yeah.
follow someone that they think has given them good advice historically, and they're just going to sort of blindly follow that advice. And if there's enough of them doing that, it is really basically like an institution.
Yeah. Yeah. Now, how have you seen investor relations change over your career?
Well, again, it changes based on the size of the company that you're with. And so that changes who you're speaking with. It certainly changed significantly during the 2-year COVID hiatus, where we were no longer meeting in person and we were meeting over Zoom, which I found to be incredibly effective. It saved us a ton of money traveling all over the world. It saved us a ton of time, because sitting on airplanes and in airports is not a good use of time. And it was great. I would never fly my CEO to Singapore for one meeting, but I'll absolutely book a conference call in Singapore, right? So we got to reach a whole bunch of investor markets that we hadn't been to before. So that was fantastic. Obviously, everybody's back to in-person meetings, but I do find that we're getting a lot more inbound requests of people saying, hey, can I have a quick call or a quick chat or a quick Zoom call? So people are more comfortable now just picking up the phone or sending an email to request a meeting, as opposed to waiting for a formal meeting at a conference or that's booked through a non-deal roadshow. So that has changed.